Rental property owners say the government's plan to end negative gearing is unfair. Landlords can pay less tax if their mortgage payments are higher than the rent they bring in. But that's about to change. Emma Jolliffe reports.
The government says negative gearing is simply a subsidy for property speculators, and from next year it'll be gone.
Because it's distortionary in the property market. We want to make sure that first home buyers have a fair go.
Distortionary because investors can offset losses against their income to reduce their tax. The Property Institute's not happy.
Extremely disappointed because the rationale behind it is essentially about envy and punishment of landlords.
Negative gearing works like this. If an investor buys a property and pays $40,000 in mortgage payments and expenses, but only earns $30,000 in rent, they can deduct their $10,000 loss off their taxable income so that they pay less tax. Someone earning $80,000 would only pay tax on $70,000. National says scrapping it will hurt more than just speculators.
We have to be careful that we're not scaring off mum and dad property investors, actually just middle New Zealand.
The Property Institute says targeting landlords when housing stocks are already low makes no sense.
All this is going to do is scare property investors, particularly first-time property investors, out of the market, which will reduce the number of rental properties available.
The Institute says it will drive up rents, but some experts back the government decision. Financial author Mary Holmes says negative gearing has made property a ridiculously good investment for those who can afford it, and that hasn't really been fair. Emma Jolliffe, NewsHub.